Dear traders, ladies and gentlemen, welcome to our daily trading webinar series, Real-Time Daily Trading Ideas. Today it is Tuesday, the 27th of March. My name is George Frieske from from Admiral Markets German office in Berlin, and I welcome you to our daily trading webinar series. Of course, as of today, we want to show you trading ideas, hopefully scan the markets for you and answer your questions live in the webinar. Before we begin, please have a look at our risk disclaimer. The leverage effect in Forex and CFD trading can work for and against you, can affect you positively and of course negatively. Please be aware of the risks in trading leveraged products. Also, this webinar is for you and information only, so it's no instruction for you to trade. And every Tuesday it's Paul's turn. We have every day a different trader for you, so every day you can see a different trading style. I see I have the old file here right now, but yes, today it's Paul's turn. And Paul, you can take over right now. I will give you my screen and the microphone, and then let's just start.
Good morning. Thank you, George.
Okay, Paul,
good morning,
you should
everybody.
have the microphone right now.
Super. Good morning. I hope you can all hear me. I hope you can all hear my voice. Hope you can all see my screen. Hello for those of you joining me today as for the first time or joining us for this regular Tuesday morning slot. Well, here we are. We're 27th of March. We're already towards the end of March. Already towards the end of Q1, and I don't know about yourselves, but for me it has flown by these last 3 months. And this gives us an opportunity to have a look at what's happened over the last few months, and also just to give you a little bit of insight into what we might see this week. What we're expecting is this week. Remember, we're getting to the end of the month, we're getting to the end of the quarter, and also for certain parts of the world, like the UK, we're getting to the end of the financial year as well. Okay, so with that in mind, what we expect to see is an element of spikes and volatility within these markets over the next few days. Why would that be? Well, invariably, as you get towards end of quarters, end of financial years, okay, you have all the big fund managers, all right, and then you're getting towards the end. They want to make their numbers look good. So where we've had some nice trends, we shouldn't be surprised where we see some profit taking. Then again, there might be one or two fund managers who had a little bit of let's say, a struggling quarter or a struggling year, and so what they might be doing is liquidating some of their profitable positions in order to sort of varnish up their particular performance and results. So, with that in mind, it's not unusual for us to see nice trends sort of have blips this week, okay, as we see sort of some profit taking going on, and I'll show you a few examples of that, and as always, we'll have a look at how we can actually profit from that. Okay, so let's just do a little quick thing. We've had in the last week, we've had the EU UK transition deal has been agreed. More importantly, we also had Trump firing off his the starting pistol on his trade war, and that'll have an impact on currencies in particular and indices, and in particular we're going to look at that in the yen in the moment. But let's have a little start with euro dollar here. Okay, so I'll just move my elements out of the way. Here we are. Okay, this is the daily chart. For those of you who are completely new to trading, then what I have here is just simple charts: green bullish candles, red bearish candles. All right, you can see I have a blue 20 simple moving average, a red 50 simple moving average, and a green 200 simple moving average. And you can see where I was sort of drawn on sort of levels of dotted lines being horizontal levels of support resistance, and I've drawn on the odd sort of trend line or pattern as we have seen it. So here's euro dollar daily. You've heard me talking about this kind of 125 level here. You've saw me talking about over the last few weeks this sort of triple top that we had here that finished very nicely with this sort of big key reversal. And what we actually had is we had a sort of, let's say, kind of sometimes talk about the big trade and the short, smaller trade. We had a sort of a longer term, bigger trade here off this with price looking to sort of return to around about the 24.50 area. area. That's what I was looking at. And price here at the start of March got up to it, but it just didn't, and it rolled away. But actually over the last day or two, it's got up, and we've triggered that longer term trade there. Okay, sort of being short about 24.50 with a stops above the recent highs and targets back down towards the block. So that's all well and good. Sometimes longer term trades take a little bit of time for them to play out for us. But how can we look at using that information on a sort of shorter term basis to have a look at a trade? Well, here we go. If we go down to the 4-hour chart, which is a great chart to trade off from the for the sort of swing, and even for some intraday traders, but definitely for swing traders, it gives us some great opportunities. And what I'm looking here is, let's say, is a shorter trade. What we've just had complete here after this nice run up was, we hit that level, and then we've had this, really sort of large, it's an engulfing candle, it's a key reversal candle, it's a pin bar, it's it's a thing of beauty, ladies and gentlemen. So that gives us an opportunity to sort of to take a sort of a shorter term trade. So what I'm going to be looking for is to sort of, let me just move this in so we can use the mini terminal a little better there. I've got the Supreme Edition mini terminal on here. It's a great tool. Every week I talk about what a great tool it is. So I'm going to have a little sort of short order around about sort of 24.33, 24.35, okay, just in that area with a stop just above the highs, okay. And then I'm really looking down to sort of around about 22.33 here, okay, sort of just back down towards those kind of recent particular lows there. What that does is that gives me sort of gives you sort of a trade risk of around about 200 points, sort of a trade risk of about 50 points for a reward of around about 200 points. So it's just under 4 to 1. It's about 3.6, 3.7 reward to risk. Well, for me that's a great trade. Okay, for me that's a super trade. As always, you hear me talking about asymmetric reward to risk ratios. That's what I'm always looking to do. And ideally, if I'm going to risk £100 on a trade, it's to generate possible profits of 2, 3, 4, 5, 600. Okay, I'm always wanting an asymmetric reward to risk. So there you go on the euro dollar. That's an opportunity there, and I'm sure that if for intraday traders, you might even be able to sort of burrow in and sort of get an even smaller, tighter entry on that. But that's what I'm particularly looking at there. What I also wanted to draw your attention to here is, as we go through a little bit of a few of the normal elements, is, we've talked about euro sterling. I'm not going to do much on there because I don't actually have a trade for it at the moment, but I just want to sort of, you've heard me talk about this 87.50 level, all right? It's just every time it gets down there, it gets knocked back. Last week was the first time we actually got a close beneath it on the weekly basis, and I take a lot of a lot of interest, a lot of focus on where the weekly closes are. Okay, that can tell you an awful lot about the sentiment. But if I look down to the daily chart, well, what we can see here is those people who were shorting euro and buying sterling here, not surprisingly, probably taking a bit of profit there. And once again, we've had a little bit of bounce above that 87.50. I don't have a trade right this moment, but what I'd be watching is, well, will price come back down to that area? If so, will it give me a nice rejection candle in that area, in which case it might move up, and then that might be an opportunity. So it's a case of, there's always trades today, but you're also doing a bit of scenario analysis, looking at possible trades in the future, what possible setups you can keep an eye on. Think about it, is that you're just setting almost like a trap. Okay, if price does that, if price follows your plan, well, then you have a trade. If price doesn't, well, then you have no trade and you move on to the next one. So just keep an eye on that on euro sterling, and in the same move, we've got looking at oil here. Okay, I've touch it occasionally. Okay, and here is the 4-hour chart on the US oil. All right, and we talked about this a couple of weeks ago about how I was talking about how we could see that it was coiling up. Okay, you can see how this is the 4-hour chart, and you can see how it was coiling up oil. It was just getting tighter and tighter and tighter into that sort of symmetrical triangle pattern, and then once that happens, we expect to see it to break and move, and we can see that's what actually happened sort of start of last week. Okay, we had a little bit of a breakout, a little bit of a push before we had the race north on it. All right, and so once again, I don't have an exact trade on this at the moment, but I'll be keeping an eye on it. We're back up here, okay? We're back up here at these levels, all right, okay? About sort of 65 to 67. We're back up at that level. We've had a little bit of a fall away from it, and now I'd be interested to see, does it have the energy? Does it have the energy to sort of, push back up higher, or will it effectively get up there and roll on? And once again, if it gives me a little bit of a double top, okay, a little bit of a double top, let's just draw it in there, a little bit of a double top, then with some rejection candles, some good rejection candles, then I might be interested in sort of just, sort of being on the short side for that. So once again, it's just a little bit of a scenario. I'm just keeping an eye on it, okay, and just, if the trade works out, or if the price action follows my plan, well, then I have a trade. If not, well, then we move on to something else. Okay. So there's a little bit of that, but as I said, I wanted to talk a little bit about the yen today, okay? There's been some fantastic trades on the yen over this particular quarter. I'll just switch this, make sure we're all up, good and running. But, the kind of Trump trade war, that will have an impact upon sort of Japanese yen, and in particular the Nikkei as well. What we have is that, Japan is a heavily export driven economy. And if there is a likelihood of, tariffs going and a trade war being created, well, then that kind of makes people nervous. That kind of makes people a little bit, wary. And so money pours into safe haven currencies, for which the Japanese yen has seen one. So, we've seen that in an element of some strength coming through on that. On the flip side, what we've had is a great deal of weakness, and in particular in the commodity dollar currencies. Okay, that's what we've particularly seen in the commodity currencies. So on one side of the equation, we've had sterling being strong, but also Japanese yen strengthening throughout the quarter. And then on the flip side, we've had Kiwi dollar, Aussie dollar, Canadian dollar in particular, weakening throughout the quarter. And if I just look at this, we look at the chart here, okay, this is the Aussie yen, okay, that's the daily chart. So, as it's going down, what's that telling us? That's telling us that, the Australian dollar is weakening, Japanese yen is strengthening, and there's been some nice trades all the way down here on the sort of, let's say on the kind of the longer term, the swing trade, okay, that's what we've been looking at. And then also what we've seen is the sort of CAD yen as well. CAD yen in particular, has been Canadian dollar has really sort of been the whipping boy for the last few months. And with, that being on the weak side, yen being on the strong side, that created some great trades for us, okay, onto the short side. But as I said, if, as traders, the big fund managers see that, if they've been short of that, they're going to want to look to take a little bit of profit. And maybe that's what we've seen over the last sort of 24 hours. OK, we've also, remember, we're getting towards, sort of holiday season, Easter holidays. OK, so guys will be off there. People will be making a little race for the last trying to catch the last snow on the slopes in the Alps. All right. And they'll want to basically take some profit so that they can go on holiday and enjoy that time without worrying it. And that's what we've seen. OK, in the last day or two, a little bit of profit taking, as I said, a little bit of some spikes and volatility, okay, as people just take some of their profit off the table. But, here we are in the CAD yen, and what I'm looking at today here is, price has, it's kind of rolling out, but we've pushed up to this daily 20 period moving average. Let's put this on here. We've pushed on to the daily 20 period moving average, all right, which is acting at the moment as dynamic resistance and has acted nicely like that. So when I go down to the sort of shorter time frames, well, what am I looking at? Well, what we've had just here is a very nice sort of, engulfing candle, key reversal candle on the 4-hour candle, okay, that has give me an indication that, maybe what we'll see is a little, for the rest of the day, maybe a little bit of a move down, okay, the sort of re-exertion of the sort of the trade, or re-exertion of the existing trend. So how do I look to trade this? Well, I'm going to be a little bit aggressive today, okay, so I'm just, I'll be looking here, okay, just drawing on some fibs, giving me some ideas of what we can look at. So, I'd be sort of interested here, and once again, just, I'll be looking at around about 82.20 as an entry. My stop just above there, about 82.48, okay, just above the highs. And then, I'll be looking down towards around about sort of 82.30, 82.25 on the target side. So there we have a little bit of a trade on for the day. Once again, what am I doing? I'm risking about 28 pips, okay, for around about sort of 90 pips on the short scale side of it. So that's, just over 3 to 1. If you were a particularly sort of aggressive trader, you might actually even have the sort of, the target down towards the recent lows here, which would give you probably around about a 5 to 1 reward to risk ratio. But It's one of the things that we can teach you. We can teach you a huge amount about trading here at Admiral Markets. One of the things you have to learn for yourself, though, is to understand your own risk profile. What is your own risk profile? And that's that is something that that you learn from trading, from keeping good records, analyzing your trades, working out where you find your groove, your sweet spot, and then being able to sort of trade within that. So there we have a little trade on the CAD yen. Let's have a little look at, I want to have a little look at the Nikkei, okay, as well. So, if I go to the daily chart on the Nikkei, what we've had here is, it's not been a terribly happy story, has it? Not been a terribly happy story. We had, what we've had is effectively a case of, we had the sort of the market tumble at the start of February, which we saw, right? That came along there, and that affected all of the indices, and sort of the Nikkei dropped about 8% in a day there, which was a lovely trade if you were short. But what we've seen is the Nikkei has failed to sort of re-emerge, but what we've also seen is we have this sort of the inverse correlation as the yen gets stronger, invariably the Nikkei tends to get weaker. Why is that? Well, because the Japanese, it's an export economy. So, of course, as the yen gets stronger, that makes Japanese exports more expensive, which means it's likely to have a knock-on effect on their sales and their revenues, etc. So, not surprisingly, that can happen. But what we've seen here is the last day or two is, remember what I was saying is, people taking a little bit of a profit on their trades. Those who are going to be short, taking a bit of profit, all right. Those who, who have been sort of longer, long yen will have been taking a bit of profit and maybe doing a little bit of repatriation as well. If I go down to the 4-hourly chart, what I'd be looking at here is, just around about the 50 period moving average. What I'd like to see is, I'd like to see if, up here onto the 1 hour, about the 200, I'd be liking to see if, if you see a nice strong rejection candle, that might be an opportunity for a trade today to the short side, sort of trading back down towards the sort of, the 20 period moving average. So that's a little bit of a question of sort of watch and shoot in terms of just keeping an eye on how that particular trade plays out. So I hope that gives you just a little bit of insight, okay, into what what's going on. As I said, it's just we've just been a little bit just wary because it's as I said, it's the end of month, end of quarter, and end of the financial year for some. So as always, just keep your powder dry. Make sure that you trade with good risk management principles. All right. We always we always talk about it is that as you're trading, you always trade with a stop loss in place, and you always trade just risking a very small portion of your account in any one trade, so that it allows you to live to fight another day, okay, regardless of what the market may do. So we've got a minute or two left, George. If there's one or two questions, I'm happy to sort of happy to take them, or alternatively we'll let you get back to your trading day, ladies and gentlemen.
Well, Paul, there are maybe two short questions. And the first one is which moving averages you are using. So you have a lot of lines on your charts. Some people are asking what they are.
Okay, absolutely. So here we go. We'll have a look at this. So what I have here is the blue moving average is just a 20 simple moving average. The red is a 50 simple moving average, and the green is a 200 period moving average. So hopefully you can see some people will use moving average crossovers as sort of trading ideas, okay. Of course, when the faster crosses the slower, they'll buy, and then when it sort of crosses beneath, they'll sell or close the position. That works very well in a trending market, as you can see there, but it tends to struggle in a sort of a range bound market. I just use moving averages to give me an indication of the trend, an indication of the strength of the trend. And also what I'm interested is when I see these sort of moving averages like here, okay, like here, when they start to act as almost like dynamic levels of support or resistance, okay, we can see here on the 20 period moving average, okay, we can see the price bounced off it every time it was in the zone there, okay, until it actually comes beneath it, and then actually what happens is it turns from being support to resistance. And that's one of the great ways to just basically to use that to give me an idea. It also acts as sort of nice targets. You can see the daily 200 period moving average from the top. Once price breaks the 20 and 50, there's a good chance that it will head down to the 200 period moving average as well. Hopefully that answers your question, George.
Yes, of course it does. And then another short question, if you do have a look on volumes used in trading, tick volumes or real volumes, do you use them or don't you have a look at them?
For working in the FX market, I personally don't use the volumes. There are I know there are traders who drive that, especially within equity markets. But within FX markets, I'm very comfortable to just keep it as simple as I like. Okay, be able to sort of understand sort of what price action is doing, and be able to sort of trade that price action as it reacts to either levels of support, resistance, areas of supply and demand, or even to sort of dynamic support and resistance on the moving averages, as we saw. So I'm very happy. I know some people use volume, and it's clearly a very useful tool for those who can operate with it and work with it. But personally, I'm very happy just to trade what I see in front of me, and then use an asymmetric reward to risk ratio to sort of help give me good particular trades. So I hope that helps, George.
Yeah, thank you very much, Paul, for answering your questions. Maybe your last words for the webinar, then I will take over the screen once more.
Sure. So it's just it's a case of this is as I said, it's the end of the quarter. It's been a great quarter. Okay, we've seen yen strength, we've seen sterling strength. Okay, we've seen euro strength as well, although it has faltered a little bit. But we've also seen those COM-DOLs. Okay, Kiwi dollar, Canadian dollar, Aussie dollar. They have been pretty much hammered for the quarter. And what I talk about is as we move into the Q2, then just take a bit of time to work out where is the strength and where is the weakness in FX markets, and have a look at how you can position yourself on there. And with the indices, well, then you look at seeing where are the the American indices are still leading the world. Just watch them and have a look at how they react to the behavior of the sort of the Trump trade war, and that one might give us an indication of what we might see for the sort of the Q2 and Q3.
All right. Thank you, Paul, for your detailed analysis. I will take over the screen to end the webinar. Dear traders, if you have any further questions, you can contact your local support team. We have customer support in many languages available to you. You can go on your local website and then reach your customer support. Or if you want to contact the UK customer support, please use the email address and telephone number you can see right now on the screen. Yeah, we are happy to welcome you tomorrow once more. Tomorrow we will have you with Giancarlo. He will guide you through the markets, and we will be glad to welcome you again. Thank you again, Paul. Thank you, dear traders. We will hear each other tomorrow. Have a nice day and successful trades.